What about this week? This market volatility, has it made you a little bit wary of the markets at this point?
I think this week we're more likely to have a consolidation week. I think a lot of investors and traders will wait to see what comes out of the Fed meeting in Wyoming this weekend, and we've had 3 very violent weeks, so I think it's more likely that we get a consolidation week this week.
So consolidation meaning more declines on the stock markets?
No, I think we just have a week where the market will bounce around and basically end the week where it started. We're not looking for a major rally with the economic data that has to come out plus the meeting this week. But I think it's more likely that we trade sideways. I think the intraday ranges will be a little bit lower than they've been the last 3 weeks, and maybe people have a better sense of where markets are heading after the weekend.
Oh, well, it seems like treasuries are pricing in right now QE3 to be announced at Jackson Hole, Wyoming. What are your thoughts, your bets right now?
Look, I think like a lot of things, I think at the moment that's a 50-50 bet. I think given QE was taken off the table only a couple of months ago, I think they'd be a little bit reluctant to bring it back in. They're more likely to make similar statements along the lines that they'll support the markets however they can, but I think they'd prefer to leave that in their pocket for I guess more problematic period down the track. So I think that's unlikely, but I think that's one of the reasons that the market is likely to trade sideways this week, because it's not certain to us what the Fed can say to calm people's nerves and help support sentiment, which is very poor.
Yes, they probably won't come out with statements as bold as Angela Merkel, the German chancellor, saying that she refuses to be bullied by the markets. That's not going to dictate policy in her view. But is that the right move from her, Germany, which is supposed to be the leader of the Eurozone right now, and not much fiscal union?
Well, I think the ECB has done a pretty good job, I think, of bringing yields down in some of the peripheral nations in Europe. So I think in Europe, stabilising those bond markets that are most at risk is probably the most important thing for Europe right now. And you don't need a change of policy from governments in Europe for that to continue to take effect.
Okay, well, let's also talk about the markets and valuations, because you heard our reporter Zeb Eckert talking about some people saying there's more, say, value right now in the Asia-Pacific, bargains to be found. But are there bargains when you consider that maybe the earnings revisions haven't been coming down as quickly as they should be, considering the global growth environment we're in?
Yeah, look, stocks are cheap, but the economic outlook, the outlook for most companies is murkier than it's been since 2008. So this period of volatility that we're in has still got a way to play out, and we're not going to know for sure what the global economy, what the US economy in particular, is likely to do over the next 12 months. I think for another 2 or 3 months. So okay. In a broader sense, volatility continues, but I think this week will be relatively calm.
Hey, Don, what have you been doing with your cash, the fund's cash, over the last few weeks? Have you just been holding steady? The big leg down, 2 weeks ago, we basically put all our money into the market, and we've only raised a little bit of cash since then. So we're just trying to add to companies that we already have positions in, companies that we think the earnings outlook is relatively safe. Just adding to existing positions. We haven't changed the portfolio to be more defensive or more aggressive. We're really just adding to names that we can trust.